morning, everyone. It is February 16th, 2024, and this is the AgYield War Room. I am AgYield Marketing Manager and everyone's favorite backup host, Jack Coakley, filling in for Dan Dempsey today, who might not be with us physically, but is always with us here in spirit. I brought this poster from my home this morning. I have every room in my house has one of these posters in it. So I just thought it would bring a little inspiration, a little bit of light into this beautiful Friday. From there, as always, join the discussion, post a comment, send us an email at info@agyield.com. We would love to hear from you and would love to get your feedback or any of your comments or questions on the show. So that's how you can reach us. Enough rambling from me. Let's head over to Johnny for overnight numbers.
Yeah, good morning, Jack. Thank you. Overnight numbers, pretty docile. You got March corn down a half, East corn unchanged, March beans up 0.75 cents, Nov beans up 1 3/4 pennies, March wheat down 6.5. Stock market's down a little bit right now, going into the open, and you do have crude oil up a little bit and the dollar as well. So we'll see what Friday brings for us going into a long weekend.
Thanks for that, Johnny. From there, let's shoot it over to Ben. Ben, we were talking a little bit before the show about what's going on in the world, what's going on in the markets. Go ahead, take it away.
Yeah, I think that this is always looking kind of backwards. Everyone always tries to figure out what's going on with the markets right now. I think one of the mechanical functions that is kicking in here is we're seeing basis contracts start to exceed the advance. So depending on where you're at, it could be a 70% advance, it could be an 80% advance. But when you factor in where we started at with the roll, you're in that, getting in that 20% range. It's a very uncomfortable situation for all parties involved. The elevator, depending on how their contract is written, they may either say, hey, you're getting a negative equity, our contract says that you have to price this, or even the worst scenario is where you have to walk in and write a check, which is a real pain for everyone, and you wind up becoming an accountant / banker / margin call person at the facility. So if you look at the general numbers we were discussing this morning, we're getting in that range where a lot of basis contracts are starting to eat into the equity that was paid forward. So that may be kind of a preemptive move by some of the commercials to stop the bleed here. I think Justin summed it up best in our discussion beforehand, that the grower is getting a margin call. And I think that pretty much sums it up. It'll be interesting to see when this gets cleaned up here towards the end of the month, how the markets react. I also, this is kind of going down a little bit of a rabbit hole also. I think that the producers' long position is a very publicized trade. And I think it draws in a lot of day traders trying to jump on that, creating kind of a long squeeze here. So certainly, there is room to continue to gravitate lower. But I think that when we get beyond this kind of roll period and clean up some of this negative equity, we've got a pretty exciting 3 or 4 months in front of us. I don't think it's probably to the expectations a lot of people will have, but probably just stop the bleed, which would feel pretty good at this point.
Yeah, I was going to add to that, Ben, just, obviously agreeing with those comments, but also if you look at yesterday, specifically, the break was led by the back end, meaning the new crop contracts. So typically I think when you're getting, close to when a bull market kind of ends with the back end rallying, it's not led by the front end. That's kind of a bad sign. When the front end starts being led by, by new crop, where the spreads are narrowing, you've almost got March, May beans, they're only at a 3 or 4 cent carry, right? So you've seen those spreads narrow on this last leg lower. Not that that's wildly bullish or anything, but at the same time, it's not being led by nearby weakness, right? It's being, you're starting to catch a bid in the nearby contract. So, I kind of view this as, we talked about this yesterday a little bit, this whole week that farmers getting super nervous. We're getting a ton of calls. Farmers feel like they have to sell something. So I think you're getting old crop sales, new crop sales, kind of across the board. Like you said, farmer getting a margin call, right? So, one of the inherent, and you and I talked about this, I think, a couple of days ago. One of the problems with these basis only contracts is that if you're a trader and you just go, buy futures, right? The market works you out quicker because you have to pay that margin call every day. When you're on a basis only contract, you can kind of put your head in the sand, and all of a sudden you get a call like, hey, you're down $1 a bushel, right? And now you have to pay. So, that's kind of one of the, unintended consequences of these kind of contracts is a lot of growers don't realize how much money they've lost, until they're, have to reconcile that situation. So I think that's the situation we're kind of running into. We talked about this a little bit yesterday again, but that's the main focus. You can talk about census numbers, USDA reports, weather. Right now, this is the main driver, I think, of our markets.
No, those are some really good points for sure. Dustin, it looks like you had something to say there. You want to jump in?
Yeah. So when we're talking about, like, let's say the wind is definitely out of everyone's sails, I think that's a fair statement right now that we're seeing a lot of people kind of throw in the towel, growers, and sell. And what we're hearing is that it's not just for old crop, it's for new crop, to Justin's point. So let's just think about volume for a moment. Yesterday, the March contract will trade 200,000 times. The D's contract might trade 25,000 times. Okay, so if a grower is saying, okay, I'm ready to sell 50,000 old crop corn, and why don't you sell 25,000 new crop corn at the same time? The market may not be in a position to actually expect that right at the moment, right? And that might be part of what we're seeing, why it's actually being led by the back end too, is that you're seeing both markets being hit with the sale at the same time. We want to focus on comparative advantages still. Think about if you have a crop insurance policy, 85% policy, that's more than likely going to kick in where a price floor begins just below $4 corn at where we've averaged so far. So that's assuming average yields, just the pricing component of it. We also have farm bill below $4, right? So whether it's PLC or our county, more than likely you should be seeing payments below $4, even for our county. There's actually better balance sheets at $3 corn than there's $4 corn. I think the big thing for us is like trying to just look at gap coverage. Where is the worst spot for us right now as a grower at the end of the year? And how do we plan around that? I don't think that the approach that I've been seeing right now, which is like a lot of people kind of grasping for straws on accumulators, things that box you out of flexibility through the year, that could be problematic if we are making, we're going into a time frame of volatility, whether it's sharply lower, sharply higher from here. I think that the moves are still expected to be there, and we're not getting much actual premium for some of these contracts. So just want to throw that out there again, is that we are seeing people kind of throw in the towel a little bit for new crop corn, and it might be the right thing to do. Just want to measure that decision for what that means for the rest of the year. As you're thinking about selling new crop, how you go about that is important.
Those are really good insights, Dustin. Thank you for that. Unless anyone has any other topics, I feel like I know where the next segment is going to go. Brian, I think I've failed as a producer, because we really need a theme song here. Like, we need like a video break, and then it's like Fun Fact Friday, and then like a guitar riff. I'll work on that. But let's hear what you got.
All right, thanks, Jack. I appreciate it. Yeah, a little Fun Fact Friday for President's Day edition. Originally established in 1885 to celebrate George Washington's birthday, later revised in 1971 by Nixon to celebrate all presidents' accomplishments, in my opinion, if there is any, for some. But I came across two pretty interesting facts on two different presidents here. Andrew Jackson, where is he? There he is. I would vote probably one of the best head of hair on any president. It's funny that he's actually on our paper currency. He despised paper currency. He would only carry silver and gold in his pocket, and actually shut down part of the Second Bank of the United States because they were manipulating the paper currency, which then leads to Lincoln. Everyone knows about his assassination, but not everyone knows hours before that he actually established into legislation the Secret Service. I doubt it would have helped him at Ford Theater. He originally established that to crack down on counterfeit paper money. So maybe Jackson did have a little foresight into that coming up in the future there. So I thought those were kind of two interesting facts on some presidents heading into the weekend.
Yeah, I've never once thought about Andrew Jackson's beautiful locks of hair. So this has been really insightful for me.
Very insightful for me as well.
Yeah. Okay. Well, any parting shots? Anyone's got anything to say before we head into the weekend to wrap things up?
Good on my end.
No.
I'll take that as a no. All right. Well, guys, thanks again for tuning in. Dan, thank you for being here as well. Like I said, we are live on YouTube. We're live on Facebook. We're live on X. Please subscribe to us anywhere you receive your social media, and subscribe on YouTube to get some more updates from us and everything else like that. I hope everyone has a tremendous weekend. Oh, one last thing, of course, the holiday on Monday, we will be closed. We'll be back Tuesday morning. You'll see us there. And if memory serves correctly, today is the day of a War Room superfan's birthday. Mr. Keaton Dempsey turns 8 years old today, which is why Dan is out. I hope Keaton is watching from the lazy river. I believe they're at a water park. So I imagine Dan and Keaton are on separate iPads on a lazy river watching today's show. So
I would assume that as well.
Yeah.
It's fun. Every week I wonder if I get to keep this job. Anyway, so thanks again, guys. Thanks for tuning in. We will see you guys next week. Everyone have a good one.
All right, thanks, guys.
Thanks.